okay, live from the other side of the world. You're not really the other side of the world. You're kind of across an ocean over there, but I'm pretty.
Halfway.
You know what? When I'm on the island, I'm not on the island right now, but when I'm on the island, I'm pretty close to you. By the way, at the island, ooh, there's a big storm out there. It is just going to head north of the island. Okay. There's nothing like owning a multiple million-dollar property with absolutely no insurance. I mean, I have liability insurance, but I don't have wind damage insurance. Like, people that live in
Mm,
Florida, people live in Florida, like, get it. But in Florida, you almost have to have insurance because if you have a mortgage. But if you live in St.
yeah.
Croix, there's like a no mortgages really in St. Croix. Like nobody's, crazy enough to actually give a jumbo mortgage in like St. Croix. But if you do, um, they wanted $75,000 a year for like basically hurricane insurance, 75 grand a year. So do the math
Yeah.
over here. Plus, it was a $20,000 deductible. So net after you're done paying the insurance and everything, you're into it
100K.
for 100 grand. So
Yeah.
I have a real problem with this because like the first year I was there, I was like, I know what's going to happen. I'll pay $75,000. And I'm not, by the way, I'm not joking. Like literally it's 75, it was $78,000 to be specific, was the last quote I had for insurance in the house. And then it's $20,000 deductible. So basically you're in for 100 grand. And the problem I have is I'll go from like, like right now I'm like, ooh, there's a storm out there. No storm, no storm, I'll be like, it's like no storm shutters and not putting those up because for like I'm paying 100 grand. Like I want to get my $100,000 out of it. So I decided, okay, I'm like, I've sold puts naked in the SPX. I got way more
Right.
risk. Like I've got way more risk in the SPX over the years than I have
Sure.
like in the probability of like a hurricane hitting. And these are the things that I think about late at night. So by the way, there's absolutely zero difference between pricing derivatives and pricing insurance on a home. There's
That's what it
absolutely
is. It's exactly what it is.
yeah. So another place. So up in the mountains here in Arizona, there can be fires. There can be fires in any mountain area. So I have a place in the mountains, and the insurance up there, it's astronomically expensive. Okay, I mean it's crazy, and you have to have insurance up there. So not too thrilled about that. All right, I'm going to turn it over to you. What are you talking about this morning?
Well, I still like what Ethereum's doing. It is kind of starting to defy my expectations, doing more than I expected this early on. But I want to talk about some of the concerns that the market has had. I actually found a really nice graphic breaking it down, kind of a survey that was conducted showing which what money managers are most scared about right now. So look at some money flows as well, tie it all together, and see what other kind of trades are out there.
Sweet. I have another big question for you.
Yeah.
Today, is this a real reversal here today? You getting nervous yet? I saw you
Maybe.
trading early on. I saw you trading early on inside of the $1 million portfolio, but you getting nervous?
Yeah. Well, that was booking gains, fortunately.
Uh, well, where's the fun in that? You know what though?
I mean, that's the most fun is booking profits.
I look at your stuff. I look at your stuff in the $1 million portfolio, and there are mornings where I will wake up and look at markets and I go, I hope to beep that he actually gets out of a couple of these positions. And today was actually one of those days. I woke up and I
Yeah,
was like,
we did. It was,
yeah, it's good. You're looking actually pretty good in that portfolio. We'll have to open that up again like once a year, just like once a year. We don't have to like a
we
full
should.
reset, but we'll figure it out. With that, I'm going to turn it over
Yeah.
to you. You're good to go, sir. So
All right.
have at
Thanks,
it.
Tom.
Fire at will.
Let's go. Let's do this. All right, Theo traders. We are live. How's everyone doing today? Hope you are doing well. I had quite the chaotic morning, believe it or not. So I have a couple of modems here I use for the internet, and what I was using it's like a 1 year like anniversary thing. The gig expired, and it did today. So I didn't realize that's what happened. Fortunately, I have a backup modem, so I went to the internet store, or like the mobile device store to get it recharged. And this was about 30 minutes ago. I did some of the work on my backup modem at home. So I'm actually not at my office today. I'm actually at my home because it's just been total chaos. But I made it here in time. That's what matters. It's thunderstorming outside today. I was going to broadcast on the balcony, like I was a few days ago. But that would have been a little bit distracting, loud, and obnoxious for you all. So I said, you know what? Everyone's got to leave. I'm here in the house. We'll figure it out. We'll get through this session. But here we are. So welcome everybody. It is Wednesday, the 13th day of auspicious August 2025. Gianni DePocia here with you, and we have a lot to talk about as we normally do, because we're seeing pretty much the probability of a Fed rate cut all but priced in. We're like at 94, 96% after the most recent inflation data. So I want to take a look at how the market tends to perform when the Fed cuts and you're about 2% off of the all-time highs. So if we, continue higher here for the next few weeks, or even just stay near the highs and the Fed cuts again, it's going to be looking pretty good based on the data. So stay tuned for that. I think you'll be very interested and pleased to see what the past instances show on that front. We continue to see money supply expand, and this is even before the rate cuts. Crypto, Bitcoin, stocks, new highs. I do want to address, though, what the market's fears are today. Okay, so we did a survey. Well, I didn't do it, but there was a survey conducted that looked at various fund managers and talked about, hey, are you scared of geopolitics, inflation, et cetera, et cetera, et cetera. And so I think you'll be interested to see, where the quote unquote professional money class is scared of the most. And of course, we'll update you on the Ethereum trade. But before we get into all of that, I want to discuss the mindset material of the day. Hesitation. Hesitation is death by 1,000 cuts. It's so easy to get paralyzed in the abundance of information that is out there. Not just, market information, hey, this is moving, this is not, but also emotional paralysis. If you are in a winning period or you hit a big trade, you sell too soon because, oh, I don't want to see my gains evaporate, so I need to lock this in, but then you're leaving money on the table. There's even instances where, you go through a drawdown, perhaps a little bit more than you expected, a little bit more than you would want to have experienced, and then it prevents you from getting back in. Now, I've been very open and transparent about the drawdown that I experienced, end of January into February. It was about a 5 to 6 week period. It was pretty, I should say it was not fun. But what I never did coming out of that low was hesitate. I never hesitated because I believe in my method. I believe in my process, and you're going to get hit. Drawdowns are an inevitable part of this business. Okay. Trading is not a linear line straight up to the upside. It goes in cycles as well. You're going to have winning periods. You're going to have losing periods. Knowing how to win big, knowing how to lose small is what's going to keep you in this. But what you cannot do is allow those losing periods to change how you trade. Similarly, you can't let those winning periods change how you trade. Okay? I trade the same no matter. If my signal says, hey, get long here, I'm long. If it says, hey, stop out here, I'm stopped out. It's really that simple. So my system allows me to make decisions. And since I've been using it for so long over the years, it has allowed me to basically not hesitate. Not hesitate. Remember, you're trading against machines. You're trading against the algorithms. We talk about that a lot here, and they don't hesitate. They don't hesitate. Now, you also hear me preach the importance of slowing down, right? If they move fast, we move slow. But when we do move slow, it's even more important to not hesitate. Because if you're moving slow and you're taking very tactical decisions, you can't afford to hesitate on those, especially, right? You hesitate when you're moving slow, then you're really going to get caught. Okay. So all things that I want you to think about as you discover yourself, discover your strategy, discover the process that works the most for you. That's the beauty of what we got going on here at TheoTrade, right? That's the beauty. You want to trade options, you want to trade futures, you want to trade stocks, you want to do spreads, you want to do maximum loss amount, you want to do percentage loss amount. There's so many different ways to trade: swing trade, day trade, position trade. Well, what's going to outperform over the next several months type of thing. And you have to find the temperament or find the strategy that works the best for your temperament. Okay. If you're not cut out for day trading, well, guess what? There's another strategy for you. If you need more action than the buy and hold stuff, well, we got that here going on for you as well. So that's why I love being a part of this group. so much. So with that being said, let me jump over to Thinkorswim here and get ready to surf the charts. Let's see, is it jumping over? There we go. Let me see who's joining us all today, who's all in the chat room. I'm glad I made it on time, guys. It was a bit hectic here, but I did get my plan done before I left the house. But yeah, I got stuck waiting in a parking lot. I'm not one that likes to wait. I wait enough as a trader. I wait a lot enough as a trader, so I don't want to have to wait, in my regular life, if you will. So who do we all have here today? Are we talking about magnesium? I am a magnesium fan. I like magnesium, especially before bed. Helps me sleep. Jackie J, Days Boy. Am I the Ethereum master? Perhaps. No, I just, that was the trade. I don't know. I don't think it'll be the trade next year, but there will be a trade like that. And again, you find the big trade of the year, you find the trade of the year, it can define your year. And you don't have to bet the house on it either. That's the beauty of it all. Rowdy, P Butts, how's it going? Who else we have here? Days Boy, Gianni Cash, yes. Carlos, Trains, Two Carter. We got out of LIF. That was a Jackie J trade. That was a Jackie J trade. My alerts did get reset today. Not all of them, but I didn't get some of the alerts from earlier this morning because, like I said, the internet issues that I was having, but it is working, fortunately. Was able to get live here without any issues. John G, Roger Bro, Tom, Stanley Williams, Tony, how's it going? Harry, Alan, Vic from San Francisco, how's it going? SHP, Tim, Roger and Callie. Auspicious August. I like that, Branch James. How's it going? Les. Judd asks, how much do I allow for a loss? Well, I try to set my stop losses in the 8 to 10% range. Sometimes it gets a little bit over, if you deal with the gap down or whatnot. That's the exception versus the rule. So I'm not here to try and, make the market fit my mold. It's a little bit different if you're trading spreads, right? You can have a max loss dollar amount, but I always say like a good loser is like anywhere in the 8 to 11% zone. I start getting above 12%. I don't really like it. It doesn't make me feel good. Sometimes you get gaps down. Like I had a gap down on me in SMCI on a partial trade that I had on that. And it was like a 20% loss, but it was like a 5% position in the portfolio, 1% net impact on my overall portfolio. So I can live with that. I can totally live with that. Steve G, Ed Mines, Gaston, Frankie, Bonemaker D, Brian, go long magnesium. Do we have magnesium futures, Steve? It'd be nice if we had magnesium futures. BNR, Calvin, Tom. What do I think of Oust, Jackie J? Well, I don't know if it's set up like you had in Life 360. We'll definitely take a look when we get to that portion of the analysis today. SP, how's it going? Link, Greeny, did Link reverse? That trade was really working out for you well. So I haven't looked at it lately, but we can have a look at that here as well. All right, guys. Despite all the excitement in the currency market or in the cryptocurrency market, we still start with the elephant in the room. The elephant in the room, of course, is the currency market. And I always like to start with the dollar yen. We talked a little bit about the carry trade earlier this week. We talked about trends, support, and resistance. If you want to see more about those, go ahead and check out the archives from the previous 2 days. But what you're seeing today is actually the dollar pull back quite a bit. And you may even have a lower high in effect in the dollar yen here. So, you could come back down and retest this low from later in July. I've been more so in the dollar bull camp as of late, but let's just call it like it is. The trend in the dollar year to date has been higher. So, strong opinions loosely held, I guess is a good way to describe it. We did put on that short in the euro. That's probably going to stop out today. So let me just take a look at that here in the short term. Yeah, it looks like we are going to get stopped on that one. So, if you want to close it out now, that's fine. If you want to wait until the end of the day, we did have the stop loss on this on a close above 117.27. So it wasn't really a big risk that we took, but there are some consequences to the dollar weakening over the next few weeks, over the next few months. And we can discuss that because one of the things that we were discussing within the context of the dollar starting to outperform again was US stocks outperforming international stocks. But now if the dollar is going to keep weakening, it tells me that international stocks still could be the place to be. And there is one market that I've been talking to you about recently as well. I kind of want to double down on that. I think there's some opportunities brewing in that space that we can capitalize on it. And it's not even so much Europe. I think there's other more exciting markets with a tech twist because I still want to be exposed to tech. And let's just be very real. When we think of European stocks, we don't think of tech. There's industrial names, there's manufacturing names. You have the one semiconductor name out of the Netherlands. But aside from that, we're not talking AI, we're not talking cloud stuff. That's not really Europe's bread and butter. But there's another part of the world where that is, okay? Very close competition to the US. So, as we sit back here and look at the dollar retreat, okay, we look at the dollar's retreat, it does reopen our mind towards US stocks underperforming into year end. You see, I don't come in here and say, oh, US stocks are going to outperform into year end. Here's why, because I think the dollar could come back and then the dollar goes against me and I try to convince you that what I said previously was going to happen. No, I don't care, guys. That's not why I'm here. In fact, I actually want to be an example for you to see how important it is to change your mind when the data changes. And when I say the data, I'm referencing the price action because price itself is the ultimate source, the ultimate information, the ultimate indicator when it comes to data. All this RSI, all this volume, all, even the cycles, right? We're not trading that. We're not trading, when you trade options and futures, there is a time factor. That's why time is important. But at the end of the day, you're not paying your taxes with your time. You could say, oh, well, I put my time to work to get paid. Sure, but you can't say, hey, government, I'm going to give you 2 hours of my time to pay my taxes. See you next year. No, you need price, dollars, money. Okay. So price is the ultimate indicator. But, sometimes you hear me say, gotta admit, time is more important than price. And that's just kind of, I always give the example, like you're not going to go plant a seed in the middle of winter, right? You're not going to be harvesting in the spring. You harvest in the fall, you harvest in late summer. Okay. So all things I want you to think about, the euro, kind of flat against the yen. So the winner today does seem to be the yen. And even though you are seeing the dollar pull back a little bit, I still think we need to keep an eye out on this summit between Trump and Putin later this week. Geopolitical consequences, ramifications, and that actually ties into some of the fears that the market has at the moment. So this is what we're seeing in the currency market at the moment. Let's see. Yeah, you can if you want to get out of the euro short, you can now. If you want to wait until day end, it's probably not going to move much more at this point throughout this day. So yeah, just you can make your own decision. I'm just going to wait until the end of the day. Michael, how's it going? You in Michigan right now, or are you where you spend most of your time working? Let's see, Calvin. Let's see. Had some issues with alerts disappearing when setting up an alert. Click create regular alert. Oh, it's good to know. Yeah, Dave, we actually own BMNR in the $1 million challenge. We bought that stock last week. So yeah, I like that. I own it. I own it. So we're actually seeing the portfolio trend higher today. Yeah, we are hitting new highs in the portfolio, and it's not something we take for granted by any means. I'm just filling you in on what's going on. And again, that's why I started off today by discussing how hesitation is death by 1,000 cuts, right? You're going to get punched in the face. You're going to get hit. It's going to hurt. It's going to be painful, but your response needs to be equally as forceful or just as forceful. And that doesn't mean that I'm going to revenge trade. No, it's just you have your system when your system says buy, right? When your system says, hey, It's time to get long again. Even though everyone else is hysterical, even though everyone else is saying the economy is going to collapse and tariffs are going to kill us all and this and that, you listen. You listen. The system, the method is just something that gives us a decision-making mechanism, okay, to operate within this reality that is the market that is constantly changing. If you don't have something fixed, right, that is structured to help you make decisions in an environment that is fluid, you're going to have a really tough time. You're going to have a really tough time. Okay. So that's why it's so important. That's why we pay such close attention to those signals. Let's jump over to the bond market. We are seeing a good rebound today. This has been something we've been looking for, a rally in bonds. The pullback over the last week or so does appear to have led to a higher low. One of the things we talked about yesterday is the consequences of the yield curve and how money printing could lead to more, I shouldn't say could, probably will lead to more inflation down the line. But right now we're in this Goldilocks scenario where we are getting away with that without the consequences, but it's all a matter of time. Time. This is why I talk about time, time after time. Okay. Do I have to keep saying time for you to keep thinking about time? Is it that time of day already? Okay. It's 10:51 Eastern. It's 4:51 Central European time here. But yeah, no, so this rally in bonds here is right on time, right on time. Seeing a nice bid here. You are seeing the 30-year bond outperform at the upside, which is what you want to see. If we can see, these highs from early August, we can close above there. That'll be a very good sign. And I think that at that point, we got to be looking at the highs from early April being tested. We take out those highs. I think it's a foregone conclusion at that point that we're going to see significantly lower interest rates going into next year. Now, the $1 trillion question is whether the government, and they've done this before, they did this during World War II, they did it in the years after. Would they basically destroy the bond market, for lack of a better term? Are you prepared for a bond market that is, for lack of a better word, worthless? $1 trillion market that becomes worthless, not just trillion, trillions of dollars worth of a market that becomes worthless. Why am I saying that? What does that mean? Well, the purpose of bonds is to help protect the value of your cash during, that in alignment with inflation, right? Then like risk prices it an extra. Here's what I mean by that. Basically, interest rates follow the direction of inflation. So if inflation is 4%, you would expect interest rates on a particular time frame to be at least 4%, right? So if you have year over year inflation at 4%, you're looking for the 1-year treasury bill yield to be around 4%. Okay. That way, when you lend money to the government, you're at least getting the value back in the cash that you lent. And it's not just the government, you can lend money to corporations, so on and so forth. But if the situation becomes so dire from a budget standpoint in Washington, which I mean, let's be real, guys, we all see the math. Like I'm preaching to the choir here. You guys are well informed. We talk about this stuff all the time. You're aware of what's happening. We have a serious crisis, and we've kicked the can down the road for decades. Literally, my entire financial career, the can has been kicked down the road. But I don't think we're going to be kicking the can down the road through quantitative easing anymore. We have a very smart man at the head of the Treasury Department right now, Scott Bessent. In fact, the guy managed money, and you always hear me talk about, oh, these Yellen types, these Bernanke types, these Powell types, they've never managed money. Well, Bessent has managed money. Even Steve Mnuchin back in the day managed money. Trump was actually ripping on him recently, which is pretty funny. He called him Mnuchin or something. It was. I don't know how he does it. I don't know how he does it. Guys, again, it's important to laugh, have fun. You don't have to take everything so seriously from that regard. But just let me get back on track here. If we have a situation where inflation starts running at 6%, okay, say 6, 7, 8%, because it peaked out, I think it was like 9.2, 9.1% year over year, according to the official data. So, I mean, I would say that the cost of living since 2020 has gone up at least 30 to 50%, at least 30 to 50%. Okay. And stocks have generally found that too, right? That's why we own stocks, because in the long run, stocks are really the only way to maintain the value of your savings and grow them in an inflationary environment. But I digress. Get back on track here again. I could see the situation because they did this during World War II, where the Treasury just tells the Fed, hey, listen, we're in charge now. You're not independent anymore. And they're already talking about this. So, okay, we're going to run inflation at 6, 7, 8%, and you're gonna keep those interest rates on the 30-year bond at 2%. You're gonna keep the Treasury bills, interest rates at 1.5%. We'll see if they're able to do it. We'll see if we're able to do it, because here's the catch. This is the catch. Because I'm not one to just draw historical comparisons and say, it's going to happen like this time, guys, just like last time. That's lazy. You can't be lazy in this business. The difference is that America wasn't fully the world reserve currency at that point. It was kind of like a transition period, right? In the 1940s. You had seen a bunch of the gold from Europe come to the United States, but it was basically after that where we were like, okay, the US is the world reserve currency. So now that there is no real competitors, I don't want to hear about BRICS, guys. You have, India and China fighting against each other. It's not all rainbows and butterflies in BRICS land. They don't even have a bond market. You can't even, put money in and out of China freely. They have capital controls. You're not going to be a reserve currency if you have capital controls. That's not how it works. But here's the other catch that I just said. Capital controls means you restrict the amount of money coming in and going out of your country. It's limited. It's not free flowing. That's the advantage that the United States dollar has. Anyone can just pretty much park money into the system. So if they start to make these types of decisions saying, hey, we're just going to keep rates artificially low, let inflation run hot, and just devalue the dollar so we can keep this debt, this vicious, devastating, destructive debt cycle alive, like Garrett says, you better know how to trade. It's the golden age of trading. I don't like this. I want to be very clear. I don't like this. I don't agree with it. But I tell you this because I want you to be prepared for it. I want you to be ready. I want you to grow in the midst of it. It is possible. And anyone telling you that it's not is full of it. Or they just don't have the toolkit, the skill set to guide you through it. So yeah, we are going into the golden age of trading, whereby this is going to be one of the few ways to truly keep your wealth, build your wealth. And, yeah, if you have like a business too, certain businesses will thrive in this environment. But historically speaking, usually those that know how to speculate, know how to trade, will do very well in such an environment. And I feel like, we have an obligation to our family and our friends and the people around us to, take on the burden of that responsibility. So anyways, you're seeing bonds see a nice bid today, the 2-year note, nice bid. The rate cuts are coming, guys. The rate cuts are coming. I'm like Paul Revere, the rate cuts are coming. The rate cuts are coming. It's going to send stocks, guys. Be ready for the S&P 500 above 7,400. It's coming. It's coming. And it's not even like I'm saying something so revolutionary. I mean, what is that, like 20% higher, give or take? 20% higher. So, bonds, I still got my T-bills, my stock portfolio is good. And we're just gonna look to grow in that standpoint. Let's take a look at crude oil. We're still selling off here. Lower lows and lower highs. We undercut that low from late June. I think we could fall back into the $55, $60 area. I don't think there's a lot of opportunity in energy today. I do think there will be a lot of opportunity in energy in the coming months. Once the market figures out what this inflation scenario is going to be, energy will do well. Energy will do well. We're just not there yet. It's not the right time. It's not the right time. There is a reason for every season. There is a sector for every phase of the cycle. We're not at that phase of the cycle where energy is that sector yet. We're still in the phase where tech is that sector. We've been calling it the Great Tech Reset for a reason. Excuse me. I was able to mute the mic before I sneezed there. All right, let's jump over to the stock market. Just take quick stock of the situation before I start sharing some of the cool little tidbits I have for you today. NASDAQ did hit a new all-time high. S&P, new all-time high. Don asked me the question, are we seeing a reversal? Maybe. I'm going to need to see more evidence of that still. Recall I was singing a rather cautionary tune over the last, like 3 to 4 weeks, maybe. I changed my tune a bit on Monday. Why did I change my tune? Well, because I saw data that said, hey, this market may be open to a little bit more risk. What is that data? Well, we saw consumer discretionary emerge as the best performing sector last week. That is not a money flow that suggests the market is scared. It's not. If we saw it going to healthcare, if we saw it going to energy, if we saw it going to consumer staples, fine. And that's what was happening a few weeks ago. And that's why I kind of softened my tune. And I was like, hey, we have to protect now. Believe me, I'm still taking profits, still raising stops, but I have added a little bit more risk here in the last few sessions. And that's why. That's when I say, like, to borrow a phrase from the central bankers, I'm data dependent. Okay, the beautiful thing is, guys, is that as individual traders and investors, we can actually practice what we preach. We don't have to wait for the data. I should say the feedback loop that we have with the data is a lot faster than the central bankers have. Okay. So you're seeing tech have a decent day, semiconductors still outperforming. Financials had a good day yesterday. That's continuing. But it does seem to be healthcare looking pretty good. Is that beating consumer discretionary? Good. No, consumer discretionary is still winning out. Staples are down. Utilities are down. Energy down. So, you're not really seeing a lot of those risk-oriented or those sectors that are more defensive doing well today. So, yeah, that's not really what I look for when the market is in the process of topping out. That being said, I also have eyes, and I like to think that I have a brain, right? And the reason I say that is, this market has rallied for 4 months straight. You had 2 days worth of selling, or, if you even want to call it from the 28th into that August 1st low. And, again, I still see people say, oh, guys, the Great Depression starts next week. I see that stuff online. Until those people are so demoralized and discouraged, we can squeeze higher. We can. I'm not saying that it's inevitable, but we can. We can. So with that being said, I do want to share with you how we have seen some tremendous inflows into the stock market. The weekly net buying of stocks by Bank of America Securities, otherwise known as, you could throw Merrill Lynch into that. This was a near record. Okay, the 10th largest week for institutional client inflows since 2008. Now you might be thinking, well, we rallied for 4 months straight. Is that a good thing or a bad thing? I'm going to say it's both. Maybe bad near term, but I think long term, it's a good thing. When I say long term, we're talking months out. Perhaps intermediate term is a better way to phrase that. So there's still time. People are, remember we were calling it the Great Chase, right? This was like in May. Oh, the institutions missed that 15% rally at the time. Now it's a lot more. And they're still chasing because they have to reach their benchmarks. Otherwise, they're going to get fired. There is a reason why money managers, 90% of them underperform the S&P 500. There's 5% that are decent. There's 5% that are exceptional. And it's kind of just the way the world works, right? There's a smaller amount of people that produce proportionally a lot more value than the majority. I know that's not really a warm and fuzzy fact, but it is one that's based in reality. And if you want to be a trader, you have to be someone that respects reality, while understanding that markets don't necessarily move based on that. It's been said that every absolute truth is a contradiction. I think that's a very wise statement. Here's money supply hitting new highs here. So make of that what you will. Where's the money going to go? Stocks, crypto, commodities. I don't think we really need to spend that much time on this one. Let's talk about the concerns. So what we have here is what is the impact of each of the following risks on your industry? So these the blue bars here is Q3 of 2025. The yellow bar is Q2 of 2025. So the top performing one, or the top ranked one, geopolitical instability. Okay. And so we'll see what happens this Friday with Trump and Putin's meeting. I do think it's going to be a big event. I do think it's going to be a big event. It could be consequential for crude oil, especially if any good news supposedly comes out of it. I don't know. Like, are we allowed to be optimistic? Is that allowed, or do we have to be, everything's going to end at any moment type of thing? Interestingly, the trade and tariff threat has come down a little bit. We have seen an increase in cyber concerns. AI and technology has been increased. So people are more scared, more concerned about AI disrupting the economy. And, honestly, for good reason, okay? Financial and economic risks, that's more or less unchanged. Legal and regulatory uncertainty. I've been saying this quote unquote golden age of America, the historical parallels to the roaring 20s, tech boom, accommodative monetary policy, lower interest rates, tax cuts, House and Senate controlled by GOP, businessman president, deregulation. I mean, you name it, the parallels are there. Is it going to follow the same exact script? No. But we can look and see how much the market had to appreciate before we saw that actual Great Depression. And I wouldn't be surprised if they try to pump it to that extreme. You pump it up, you crash it down, you change the system. That's how it's always been, whether it was Bretton Woods, whether it was, the gold standard getting dropped, all that kind of stuff. Same idea. Supply chain disruptions, those are pretty much the same. Health risks, climate change, all that fun stuff. Now, this is a chart that I think you will find very interesting, a very interesting table. The Fed has in the past cut near all-time highs. So this chart shows the S&P's return after the Federal Reserve cuts interest rates within 2% of an all-time high. Okay. So they did it in 2019. And you remember Trump was on Powell back then too. Okay. And so they started cutting rates in 2019, and then you had the COVID crash 6 months later, right? And then the COVID crash later there too. Then 2024, we did that in September last year. We had the 50 basis point rate cut, but it's been done before. And look how many times it happened in the 90s. Okay. Remember irrational exuberance from Alan Greenspan? And turns out 100% of the time, in every single instance, historically, when the Fed has cut interest rates within 2% of stocks being at their all-time highs, we were higher every time 1 year later, up on average 13.9%. Pretty amazing stuff, if you ask me. We've also seen a tremendous increase in earnings guidance. And when you see this type of improvement and increase in guidance, stocks tend to perform very well over the next several months too. So, depending on what you want your source of information to be, I think that there's a lot of good news actually being priced into this tape. So let me see here. Did it take me back to Thinkorswim? Tell me that I had that up. Where? Bear with me here 1 second. My screen sharing is acting a little funky here. There we go. Only Thinkorswim. I'm still on Thinkorswim. Okay, yeah, that's the problem. So it didn't jump over. I'll go through those charts again here with you real quick. So, okay, so this was the inflows of the Bank of America reported money flowing into stocks at one of the fastest rates since 2008. Okay, so that's just visualized. Here's money supply hitting new highs. Okay, so I'm not going to repeat everything that I just said. This was a table that addressed the concerns from various industries. Okay, so that looks good. And then this was a table summarizing how the market performed when the Federal Reserve cut interest rates within 2% of the all-time highs. And so it was up every single time. and on average 13.9%. So we had that first cut. I guess if you want to consider it in the current cycle, that was in September of 2024. And so we're coming up into the 1 year anniversary on that next month. Okay. Apologies for that. I'm not really sure. My Zoom's been doing that lately. Let's see. Your friends make fun of you for being a trader. Yeah, the trader is a the path of the trader is a lonely road. But no, we're here together at TheoTrade, which is nice. What else do we have here? Gianni, the noted philosopher. Maybe it's because I've been spending so much time here in Europe, or I guess you should say like around the Mediterranean, the birthplace of Western philosophy. Yeah, sorry about that when it comes to the graphics there. What's going on in the portfolio today? I see some commentary, the market's dropping. Let's take a look and see what's going on here. Yeah, a little bit of selling coming into the picture here. NASDAQ is now leading to the downside. Chips are still up. Okay, let's take a look at some of these big tech names here real quick. You got Nvidia down 1.5%, but it did hit a new all-time high yesterday. I would actually love to see Nvidia go sideways a little bit. AMD having a day, to say the least. Having a day. Astera Labs, another one we've been watching, new high there. That could be due for some rest as well. Avgo, Broadcom, that hit a new all-time high, getting closer to our second exit point of 340. So remember, Friday is garbage day, guys. So we'll be looking at what's going on in the market then to see, what positions we have. Micron, did that trigger yesterday? Let's see here. 127.91. We closed at, no, this one did not trigger yet. So 127.91. Keep an eye on that. Okay, so yesterday we closed at 127.75. Okay. So that looks good. How about some of the big tech? Apple still accelerating. That's what we wanted to see, guys. That rotation is the lifeblood of bull markets. Meta, another new all-time high today. Amazon, a little bit of a snapback here from yesterday, continuing the rally off of yesterday's low. That looks good. We still like Tesla, still very keen on that rotation into Tesla. This thing is coiled up and it looks like it means business. I am long Tesla, and I know many of you are long Tesla with me. We have quite a pattern, quite a setup here on Tesla. You could argue the trend's been trying to turn higher. Really, all we need to do is take out this high from the 24th of June, and you'll have that signal. So we didn't come that far away from it today. High of 348.98. Okay, so that looks all right. And if we take that out, then it's going to be looking a lot better, I think, in Tesla. And then we know how fast it can move. So the big tech names are looking pretty solid, I think, and it's just a matter of patience. I do want to talk about what I'm seeing in China. China, I think, is the most exciting international market right now. I was big on China in the first quarter. Then we had that big sell-off, but it's been really resilient. You can see it's up over 2.5% on the day. I'm especially a fan of Chinese internet stocks. KWeb here, this ETF looks like it's going to explode. Watching stocks like Baidu, okay, I've liked that quite a bit. And one of the names I actually booked profits on over in the $1 million challenge today was Tencent Music Entertainment that hit another target. We'd already booked profits on this one before, hit another target of 26, booked some more gains on that. So that's looking good. But whether it's Alibaba or BYD, China, guys, I told you, go back and look at what happened to the Chinese market last year when the Fed cut rates in September. Remember this epic run? The Chinese market has done nothing for years, guys. It's done nothing for years. And it's a market that has a personality of loving speculation. They love speculation. I mean, even like around the Chinese New Year, like gambling is like one of the traditions and customs that they do. Okay, so but what do you think is going to happen when the stock market's going to start running to the upside? Okay, so I've been pounding the table on this. I don't think it's going anywhere. Meituan, another terrific 10. Familiarize yourself with these names. You have Xiaomi. I always forget the uh there we go. XIACF. Xiaomi. That's not the better one. The other one is XIACY, right? Yeah, there we go. More volume there. It's a good looking chart, guys. It's a good looking chart. So, I don't think the stuff's going anywhere. You got some of these automakers, Li Auto, looks good. Looks good. So we're not sleeping on China. That is the market that I'm watching the most from an international standpoint. It's up substantially more than Germany. It's up substantially more than Poland. It's up substantially more than Greece today. Greece has been one of the best performing markets year to date. I think the European trade is kind of extended. I think the new trade, in addition to Ethereum still being the case, I think when it comes to stocks, it's China. So ignore China at your own peril. We actually had an old Trinity trade name today finally hit its target. We got stopped out on the drawdown. Still had a profit on this one, but Futu, Chinese software name, has looked good. You got some of these other names like come on, GDS Holdings. That one's breaking down. QFin Holdings. That one's having some issues as well. But again, when it comes to China, I think this is going to be a big theme going into the back half of this year as well. So, call it the great Chinese tech reset from that standpoint. Because yeah, we still have 10 cents open. Look at that beautiful breakout. Beautiful breakout. So who here still has 10-cent holdings? Because this was a trade we put out. I think it was on July 23rd, triggered that same day. Maybe it was the 22nd, triggered the next day. So 10 cent looks strong. Okay. Let's see. All right. I like you guys talking about the health. That's good. Health is more important than wealth, that's for sure. So let me take a quick sip of water here because you guys know I love these you can't see it. The water, I think it's good blocking out these extremely innovative bottle caps that I have to deal with over here. But anyways, all right, let's take a look at crypto. I know a lot of you guys are eager to talk about that, so let's get into it. You have Bitcoin. Actually, the futures closed at a record high yesterday. As a rule, bullish price action. I'm not even ruling out the possibility of Bitcoin going sideways for a little bit longer. Obviously, Ethereum has turned into all the rage. We went from MicroStrategy and Bitcoin treasury companies. Now the excitement's in Ethereum. So I know many of you booked profits in the $28 to $30 range for Ethereum. What's my next target? Well, I can't tell you on the ETF because it's priced a little bit differently than Ethereum spot. But when it comes to Ethereum spot, I mean, I'm looking at Ethereum going to 7-8 grand, and that's my baseline projection. So we're just chilling. We're here for the ride. We got first class tickets on the Ethereum train. We're just gonna wait and see what happens. I know a lot of you are asking about BMNR. Like I said, that's $1 million challenge name that we bought last week. It's been doing pretty good. Other names, related to that. SharpLink has been a little bit of a laggard. APLD new high today, but now it's down in the day. Galaxy Digital, MicroStrategy. Not sure what's going on with MicroStrategy. Michael Saylor, I think, has begun to smoke too much of his own dope. Maybe it's not about Bitcoin anymore. Maybe it's just about Ethereum. To be clear, that is historically later cycle behavior, but the craziest rallies can unfold in the later stages of the cycle. Do want to check in on quantum here real quick because I know some of you have interest in that. So the quantum ETF is kind of flat today. QBTS down slightly. Palantir is a big holding there. Did we hit a new all-time high? That was yesterday. So Palantir kind of just spinning its wheels. Let's jump over to the gold market. Decent rebound here in gold. You would think the dollar pulling back would give it a little bit more of a bid. Silver seeing the better of the bid. We do have AG on the books here, but we have earnings coming up on this one tomorrow. So If it follows a trajectory like we've seen in Kerr mining, you had a big rally after earnings. You have wheat and precious metals that actually peaked right after earnings. But you are seeing gold miners flat on the day, silver miners down even more. I don't think this is a time to really press the issue on precious metals. But if the dollar pullback continues, the euro gets stronger, the yen appreciates a little bit more, then I think it's going to be a good time to be in the precious metal space, but probably not going to be the place where we are outperforming the most. So let's see. I think I have a little. Yeah. Oh yeah. Yesterday, Ethereum-based ETFs posted a record one-day inflow. Over $1 billion one day in one day went into the Ethereum um, into the Ethereum ETF space. Okay. Mountain Dew has fire retardant in it. I didn't know that. I don't drink Mountain Dew. Rosario, can I check Nebius? Let's see, take a look. Yeah, that stock's been strong. It's been on my radar. I haven't really had the most amount of success trading this one. I did have a target of 76 before, now it's down 6%. Came within a few cents of that a couple days ago. Closed at 75.33 yesterday. I don't think this is one to chase right now. Okay. App Lovin. App Lovin. Yeah, I like this stock too. So it's had a really good run here. A little bit of backfilling is, I think, pretty normal at this point in time. Um, yeah. Let me one second here. I gotta turn on I had the air conditioning shut off in here. Didn't even realize it. Like I said, I was like scrambling to get on live with you guys before I jumped on. And so my normal setup wasn't exactly there. So what I'm going to do here in the last 8 minutes, I'm running a screen here just of large cap stocks, just to see what's going on. Yesterday we did some small cap, saw some pretty interesting names, names that are still on my radar. I'm watching some of these here. I think that the setups in them are excellent. Let's see, I got to put an alert on this one, 1904, that's for sure. Okay, what have we got in the large cap space that perhaps we're not aware of? 85 names. So, even though IWM, just to jump over there real quick, having quite a day, Russell's up the most. You're still seeing more momentum strength in the near term coming from the large cap space. So let's see if there's anything here that we are not aware of at the moment. How's Robinhood been doing? Yeah, this thing was due for a little bit of sideways action, isn't it? We do have Credo technology on the books that didn't get too far away from our upside target of 140, but it is now down in the day about 5%. Let's see, we have Joby. That's been a really strong name. Been looking for Altria Aviation to kind of play catch up with it, but it struggled to do so. But I am keeping an eye on this. It actually doesn't look all that bad. Now you got through earnings. Yeah, that could be worth another look here soon. Reddit. We have been looking at Reddit lately, getting close to our target here. 250, the other one. Yeah, Reddit looks good, guys. What a stock. Honestly, it's one of the most visited websites in the world. So Reddit, let's see, 87, 223. Okay. $370 stock, $360 stock. It looks good, guys. It looks really good. Send alert here. 225, 30, 23. We're above that. Okay. How's SoFi doing this? Looks like it was getting a bit of a bid. Yeah, SoFi looks good. I know Frankie likes this stock. Had it for quite some time. I do want to take a look at LIF because this was one of Jackie J's trades. Look at that. Target hit 85. Beautiful. Beautiful. So we'll be updating the instructions on that here soon. Target of 85. So that was hit today. And thanks to Jackie J, we're able to book 30% profits on that. So we're going to let this thing run, see how high it can go. We'll talk about it more later on, but it did pop up in the screen today, so that's why I wanted to pull it up. How's GE Vernova doing? Okay, we've seen a little bit of a pullback there. I think we did just actually we broke below the stop loss. We didn't close below it, 623.97. Okay, 623.97. Okay. So we'll see if we can close below there today. I'm okay letting that run. It's been so strong. Rocket Lab, how's this one been doing? Rocket Lab going sideways near the highs. That's not bearish price action. I wouldn't be surprised if we got a little bit of a correction here. ASTS is another one in the space economy. This was Intuitive Machines is one I traded back at the end of last year with a lot of success. But I haven't really paid much attention this year, and for good reason. It's not really done much. Yeah, interesting. So not really doing it for me on that front. eBay, another one that is screaming well. Look at that, eBay. Wow. Wow, that's a nice move. Okay, well, that one's gone, but that is a classic momentum style breakout. We've been looking at names like Shopify that had that big break, getting close to our other target of 170 there. I just like to keep an eye on Spotify. Sometimes I mix those up, but no, we've been in Shopify for a while here in this room. Let's see. Do you want to look at GE? Just in general, GE? Yeah, it looks pretty good. A little bit of a reversal data here, but that's not something I'm gonna take a bet of it going short, lower. Oh yeah, Green, you want to look at Lincoln? What happened there? Oh, Lincoln Educational Services. Yeah, I mean, looking at this candle, you're probably gonna have to deal with a prolonged period of consolidation, which at the very least, which means it's gonna go sideways probably for a very long time. So you have to think about whether that is worth your time to keep holding, right? So when I say think about time, that's one of the things I like you to think of. Jackie J's got another trade for us, it seems. Ouster. Ouster. Ooh. Okay. Let's see. 18, 31, $43 target. Maybe, let me see here. Let me run some quick numbers. Yeah, maybe 43. I think Jackie J's got another winner for us here. Jackie's been with me over in the Trinity trade for quite some time. I think like since the beginning too. She's also been doing this a long time. But yeah. This looks like a Trinity setup to me, Jackie. So, I'm just gonna call it like I see it. Right? So I think this is gonna be we feed the hot hand, right? 27.58. Let's see. Can we put it right there? 27. We'll just do 27.58. Okay. All right, here's a trade. And then I gotta turn it over because up next we have Mr. Blake Young. So here is the trade for the day. Buy Oust on a close above. Let's see, 30.65 with a stop loss on a close below. I keep hitting that stupid window. Dang it. Trying to click my mouse so fast because I'm running out of time here. 27.58. Target 43 to reduce. Okay, so here's the trade for today. Again, you don't take it right now. Wait until the closing bell to decide whether it's going to enter your portfolio. So let me just record this, 3065, stop loss is at 2758, and you got a target of 43. Very good stuff. All right, that's actually a perfect time to bring things to a conclusion because Blake Young just joined. So I'm going to be passing the torch off to him. We talked about the importance of avoiding hesitation in this market because it can and will punish you, not just in this environment, but in general. Okay. Being scared at the lows and being greedy at the highs is dangerous. So pay attention to your system. When it says book gains, you book gains. When it says get long, you get long. We looked at some of the risks that market participants are worried about right now, and geopolitical ones are at the top of that. Looked at money supply hitting a record high as well. And then we also took a look at how the market performs when the Federal Reserve cuts interest rates within 2% of all-time highs. And it's been higher 1 year later every time throughout history. Of course, I'll keep you posted on the Ethereum front. But what I have to do now is pass it over to Blake. So I'll stop sharing my screen, make sure that Blake is the host. He is not. He is now. So what's going on today, Blake?
Oh, we're kicking butt and taking names.
Yeah.
So
Do we have another? I actually haven't said generational buying opportunity in a few weeks here.
Oh, do you think we need to be?
You know, I can't. It's hard for me to see, even though I did add some risk in the last couple sessions, but it's not the most risk I've ever added, put it that way.
Well, so here's the interesting thing. I know you disappeared last time or yesterday. And I talked a little bit about Bitcoin and some of the other things and some of the expectations that we're seeing. You can see we went right back up into this level.
Yeah.
Bitcoin's a risk on asset. We talked, I know you were talking about it as you're wrapping up. And so as a risk on asset, we were pushing right up into these areas. It seems to want to kind of drift higher, but it doesn't have a lot of commitment behind it. And so the same question would be, I think, as far as the Ether futures, but I was super supportive yesterday in saying, no, we have more upside in Ether.
Oh, yeah.
And so I know you, like I said, I think you dropped off before you heard me commenting on that, but I've got a target of 4,800 to even 5,020. It's kind of the upper edge that I would say. But in deep currents, we set up stuff in bonds and in emerging markets yesterday. I only got half of my stuff filled. Hopefully everybody else got everything filled because we got the gap in our favor on this. So emerging markets, I'm going to go back to your comment on interest rates and say, if the market's higher, what about the small caps? What about emerging markets? Because these are the ones that not only benefit, they need it.
Yes.
They need lower rates to survive, both small companies and EEM, which is probably why the Russell has rotated positively while everything else is selling off. The Russell's gained an additional 1.2. We've gone full tilt on the Russell.
If I'm not mistaken, EEM's got a huge exposure to China. I was talking about China specifically within that context today. Is they want the lower rates because you had that big rip in FXI last September when the Fed cut rates initially. So yeah, I think EEM's got a big exposure to China too.
Yeah, they don't have that. Usually on Thinkorswim they have the breakdown of what is the subset. I'd have to go in and look at iShares directly because they don't have it broken down.
I think it does, yeah.
Yeah, it doesn't have it on the Thinkorswim platform like they do on some of the other instruments. But yeah, so it has a ton of. So Mike, I know I'll let you go, but so if you're talking China, and we're betting on that, and we got the gap up, close up through here, well, you're always going to have a gap. One of the big concerns I have with betting on those too aggressively is this.
I know
the copper China correlation is significant to me. And this doesn't look like a recovery.
They're becoming a consumer-based economy now.
That's all we need is everybody to be a consumer-based economy.
Pretty soon we'll have the robots making all our stuff and we'll just consume it all.
We're gonna Wall-E this thing, right? We're all sit around drinking our Slurpees and sitting in front of our screens, floating on chairs, and never trust putting weight on your ankles. So
all right, I'm gonna get out of your way.
All right.
Have a good session. Talk to you soon.
Thanks. Appreciate it. All right. Let me just double